So in the short term, Australian wool production is expected to be about 4% higher this year and higher again next year, finishing at about 390,000 tonnes as the flock continues to expand. Now, as I said, that's in contrast to most other major apparel wool exporting countries. Over the medium term, Australian shorn wool production is projected to increase further, achieving about 415,000 tonnes, as the number of sheep continues to expand, hitting about 78 million at the end of the projection period. Now, in terms of price, the prospect of greater wool supplies being placed on the market at a time when discretionary spending on consumer products is expected to remain weak in the major apparel importing countries will put significant downward pressure on prices, and we expect the EMI to decline to about 1,022 cents a kilogram clean over the medium term. But what's important about that price decline from where we were just last year is that it is still 8% higher than the 5-year average up to 2009-10. So it is still a very favorable position overall. So to summarize, in 2012-13, we expect the EMI to fall about 8% because of weaker demand principally, and shorn wool production to be up to about 390,000 tonnes, largely because of flock expansion. In the medium term, with the economies of the EU and the US strengthening, that should lead to some strengthening of demand, and that will be reflected in a slight upswing in prices towards the end of the projection period. And Australian shorn wool production is expected to reach about 415,000 tonnes, as reflected because of the increase in the flock, as well as increase in the average cut per head, given what we expect to happen with the number of wethers in the flock. So that finishes off wool, and what I'd like to now is sort of skip straight into cotton, starting with the global picture. Now, the indicator price of cotton reached a record high in 2010-11, and in response to that, the world area planted to cotton this year increased. And as a result, world cotton production is expected to be 7% higher, attaining 26.9 million tonnes. And while the price is expected to fall, it is still expected to remain favorable when compared to alternative production options, such as soybeans and corn. Now, that favorable price profile is expected to stay in place over the medium term, and what that will do is provide the impetus for the area planted to cotton to remain high. And assuming favorable seasonal conditions, which I know is a strong assumption, things always happen, but assumptions have to be made. Given what we're seeing on the price side and the signals that that sends to producers, we expect production to increase every year through the projection period. Now, again, like with wool, when you have higher production but a weaker expectation for demand, you're going to have a buildup in stocks. And what we're expecting is that there will be a buildup in stocks in countries such as China, Brazil, India, the US, Pakistan, and even Australia. What that means for the stocks-to-use ratio is that it will rebound to more of a normal level at about 53% this year, and it usually wavers between 50 and 60%, or at least it has since over the 2000s. And of course, that's a rebound from the previous 2 years when low global supplies actually caused the world stocks-to-use ratio to fall to the high 30s. Now, if we could just bring that back home and have a look at how the domestic industry has been faring. For Australia, cotton production this year is forecast to be up 20% on last year at about 1.1 million tonnes. Now, that comes as a direct effect of the high prices last year, assisted by the good supplies of irrigation water. And if I could just touch on that for a moment. What I've got here are the Australian irrigation dam levels from 2 years ago, last year, and this year. For all the main dams that supply the cotton-growing regions of New South Wales and Queensland. And up to the mid last month, capacity was about 98%, and I think it's safe to say it's closer to 100% now. Also reflected in the graph behind me is a category called Other that are our estimates of on-farm dam levels. So everything is replenished, and that should sustain production in Australia going forward at least 4 or 5 years. Now, with respect to the flood, earlier in the year in the central north and northwest regions of New South Wales and the southwest region of Queensland, those regions were affected by floodwater for about a week. And while these regions account for just under half of total area planted to cotton, and we will not know what the full extent of the damage is until that cotton goes for ginning, but our cotton analyst, Ben Agbenyiga, who's sitting over here on my right, he was doing a bit of a ring around late last week and right up to Monday to get sort of their latest assessment, and it seems to be that perhaps 10 to 20% of the cotton crop will be affected this year. We won't really know until, I say, that cotton goes for ginning, but the damage is not going to be substantial. And that was the same word coming out back in February when we were putting together our crop report. And so we were able to maintain our forecast for this year at 1.1 million tons. Now, what that'll mean for exports is record high exports both next year and the year after, and that will put Australia in a position of being the third most important cotton exporting market globally, up from fourth position. And they'll decline slightly in line with production. And of course, you see here that exports always seem to be higher than production, but that's because exports are recorded a year after production occurs, since harvest starts at the end of March. And in terms of returns for Australian cotton growers, this year, cotton prices for lint will be down about 25% to $550 a bale. And export returns will follow the same schedule as you are seeing here. Now, even though these prices are lower than last year, certainly overall they are favorable compared to the decade up to 2009-10. So to summarize, the cotton indicator price for 2012-13 is expected to fall about 10% more to 93 US cents a pound. And Australian production this year and next will be about the same, and that's 20% higher than where it was last year at about 1.1 million tons. Over the medium term, we expect world production growth and stocks to rebound to roughly a 10-year average. World prices are expected to be lower, given increased supply, and the gradual strengthening of demand in the principal apparel importing countries will allow prices to strengthen late in the projection period. Thank you very much.